Let's begin with the daily chart. As you can see from the provided image, we have a clear uptrend in play. The market has consistently created higher highs and higher lows. We recently witnessed a significant break of structure bust where the price broke above a previous high. This move confirms the bullish trend. Following this bust, we see a fair value gap FVG, which is an inefficiency in the market. This is a key area where we would expect the price to return to before continuing its upward movement. The price has been pulling back and it's currently trading near this FVG, which aligns with our expectation for a potential re-entry point for long positions. Moving to the 4-hour chart, our goal is to identify liquidity and find a more refined entry point. The image shows a clear uptrend. We have a series of higher highs and higher lows, and another bust occurred. The market then formed a clear liquidity trend line. This is essentially a series of lows that have been created. Think of it as a pool of stop losses, a magnet for institutional traders. The price often sweeps this liquidity before reversing. We can see the price has already swept this liquidity trend line and is now pulling back further. This liquidity sweep confirms that a lot of short positions were stopped out, providing the fuel for a potential bullish reversal. Now, on the 1-hour chart, we see a more detailed view of the recent price action. The trend is still bullish, and we have multiple bust events confirming this. However, notice the price action that took place before the most recent rally. We have what's called an inducement. This is a small pullback or low that tempts traders to enter long positions prematurely, only for the price to reverse and take out their stop losses. The market often takes out this inducement liquidity before the real move begins. We can see this in action. The price dipped below the inducement level and then rallied to create a new high. This is a classic smart money maneuver to collect liquidity. Finally, let's zoom in on the 15-minute chart to pinpoint a precise entry. This is where we put everything together. The most recent significant price action was a break of structure bust to the downside, which shifted the short-term market structure to bearish. This might seem contradictory, but remember, this is a short-term bearish shift within a larger bullish trend. The market then pulled back and created a liquidity zone. This is where we want to pay close attention. The price has just swept this liquidity, and it has also tapped into our refined order block. An order block is a specific candle or group of candles where large institutional orders were placed. Tapping into this order block after sweeping liquidity is a high probability entry signal. So, based on our top-down analysis, here's the trade setup. We're looking to enter a long position at the current price right after the liquidity sweep and the tap of our order block. Our stop loss will be placed just below the low of the order block to protect our capital. Our target is the previous high, as we expect the larger bullish trend to continue. This is a high reward, low risk setup because we've confirmed the overall trend, identified liquidity, and found a precise entry point using a clean order block. We're essentially riding the larger trend and entering where the big players are likely to be entering as well. Thank you for tuning in.